in poker, it's simple. I mean, if you can get the money in when you're mathematically ahead of your opponent with the cards, right? Then that's an edge, right? If you can
Yeah.
just consistently do that over and over again, that's pretty straightforward. With trading, I try to keep my trading now as simple as I possibly can.
Yeah.
When people ask me what I do, I tell them, I buy stocks going up. That's it. I mean, that's the strategy. I buy stocks going up. If you're losing, you cut size and you just keep cutting until where you're trading where, one share, right? And if you win, then you have that cushion. Now you can draw down, if you're up, 8% for the month, you have cushion. You can draw down 8% and still be flat. So you can try to get more aggressive and push the
Right.
return. So that's the game. I mean, that's the game. Progressive exposure is the game. I prefer actually trading episodic pivots because it's so clear cut what to do.
Right.
You buy at the opening range high, you slap your stop on at the low of the day, and then you can just walk away. I mean, it's really that simple. Not easy, but quite simple.
What are you looking for in terms of price and volume as it gets primed, as it gets, really mature and ready for an entry?
You just want volume to dry up on the declines and to increase on the rallies. I mean, this is all textbook Minervini, O'Neil. I
Mhm.
also want the stock to be at an all-time high. I mean, that's really big. The green line breakout from Dr. Wish is just that's massive. I mean, all my best trades have always come when the stock was at or above or right below an all-time high. I can't stress that enough. I can't stress enough how important it is to keep the drawdown small. As a boom and buster and to all the other boom and busters out there, that's what you have to do. Like you can make the gains when the market's good. When it's not, you have to stop. My cursor, but on that on
Yep.
that on that first gap at like 50, it was up, almost 50% in like what 1, 2, 3, 4 in 5 days, right? It's like, oh yeah, this is what a trade. And then it's hard to tell, but it goes from 50, and on this day it got as high as 300.
Yep.
So it went up sixfold from there in what, like 15 more trading days. The market has a way, any mistake that you make consistently will eventually cost you. It's just a matter of time. Yeah, if you want to do this and really outperform, you have to go all in. You have to really devote yourself to it. It's really hard, but if you can do that, you have a shot. And if you make it's worth it. It really is.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. Okay, welcome back everybody to the TraderLion podcast, brought to you by the Ultimate Trading Guide. You can pick up that excellent free resource down below. I'm your host, Richard Moglen, and joining us today is a very special guest. Christian Flanders is a top performer in the U.S. Investing Championship. He finished second with a return of 433% last year, an absolutely outstanding year. And today we're going to dive deep into his setups, his strategies, his sell rules. I'm sure he's got a great story to back things up, his trial and tribulations as he figured out his system, as well as touch on his poker playing days. So Christian, thank you so much for taking the time to be here with me. I've been really looking forward to this one, and yeah, it's great to have you on.
Great. Thanks, Richard. Yes, it's a pleasure. I've been watching your podcast since the beginning. I think I followed you on Twitter even before that started. But yeah, it's kind of surreal being here and being on it. It's really, really incredible.
Well, it's great to have you. And to start with, I always like to hear about people's backgrounds. So if you wouldn't mind kind of taking us back to the very beginning, or maybe even before trading with poker, how did you first get into this? The game of trading, the markets.
Okay.
How did you first get interested in it? Yeah.
Yeah. So I actually was interested in trading first in high school. I read, I don't know how I found these books, but I read How to Make Money in Stocks. I read Reminiscences of a Stock Operator. And I just love that book, Reminiscences. What an incredible story. I can't recommend it enough. If you've traded for any length of time and you read that book and you just realize nothing has changed. I mean, the tickers are different, the players are different, but humans are humans. Nothing has changed. And then of course how to make money in stocks. And I read that book and I was like, wow, this is how to do it. Like it makes sense. This works. It works for me. I believe it, right? My father was more of a random walk, efficient market hypothesis guy, so he didn't believe it, but I certainly did.
Yeah.
So that was high school. Uh, my experience trading. So my dad did speculate during the internet bubble in the late 90s. I do remember that. I remember hearing about, IPOs going up as, a zillion percent and then, the inevitable crash, right?
Yep.
But I didn't follow it that closely, to be honest. Um, I started playing poker in college. This was, so you're young, so you don't remember what it was like going through dial-up modems, like, AOL 3.0, 4 minutes to connect to the internet. And
I
then
did have my
finally,
grandmother's, so I do have a tiny bit of experience with
okay.
that. I was probably at the very last tail end of that, but
Okay, so I
yeah,
remember in high school connecting to AOL dial-up on like a black and white like Mac,
yeah,
ancient desktop, and then in college all of a sudden it's like boom, T3 line, you have internet, fast, instant. You don't get disconnected if someone picks up the phone. So that was the start of everything really. I mean, internet poker, online poker was a thing. Like you could
mhm,
play, and it was getting really popular. I don't know if you know the name Chris Moneymaker, but he won the World Series of Poker main event. He qualified through playing like a $40 online satellite, and he won first place for $1 million. He was an amateur playing against like all pros for the most part, and
mhm.
that ignited the online poker boom. And that was what everyone was playing poker. There were campus-wide poker tournaments. It was huge. It was really like the thing. I mean, if I was in college today, it'd probably be all crypto speculation, right? I mean, that's what I would imagine. But back then it was poker. I remember playing with friends. I won, $50 playing. I put it online and I lost it playing, very small stakes and just being like devastated. That was like, all the money I had in the world.
Yep.
But, the players online were terrible. And I knew, so I redeposited and I ran it up. And I remember just going through these swings, like these emotional swings from, from poker. I got every book I could on the subject, a lot of Skolansky and Malmuth. Um, and yeah, I mean, I actually with the second deposit, I ran that up and I paid for my senior year of college, and everything I
Wow.
have today, it's from that initial, $100 I put on the sites.
Wow.
Yeah. So then yeah, let me go through my notes here. Okay, so after college, I got a job um, at a prop trading firm, a Chicago-based prop trading firm that traded U.S. Treasury and Treasury futures. This was like 2007, end of 2007. We traded spreads between the Treasuries and Treasury futures because like they're directly correlated. Um, and I had no idea what was going on. This was the beginning of the financial crisis, okay? And I remember that the swing, so the senior traders, it's like five or six guys, right? The senior guys, they were trading, 100 lots, okay? Like, just massive size. But the treasury market is pretty quiet. Things don't move much. So,
Mhm.
a normal day they, swing, I don't know, $50,000, right? But then, the volatility really picked up. And suddenly, with small size, with a 5 lot, all of a sudden they were blowing through risk limits. They'd be down, like $400,000 in like, a few hours. I mean, the volatility was insane. But it made no sense. Why, the bonds would just keep going up, the futures wouldn't budge. And they should move in lockstep, right? So at the time it made no sense, but now, in hindsight, it makes perfect sense. It was all the clients of Bear Stearns, all these funds that were blowing up. They had to get their money out, but they couldn't, so they just bought treasuries because they knew those were backed by the government. So, in hindsight, it
Right.
made perfect sense. But at the time, it was just like, what's going on, right? So, I remember, the firm, the markets are open, what, 23 hours a day, something. So, I worked the day shift. I worked 6 a.m. to 5 p.m. And then the market would close for an hour, and then the guys in Chicago would cover from 6 p.m. to 6 a.m.
Right.
That night shift's brutal. But yeah, so after I got home from work, I'd make dinner and I'd play poker. I mean, I didn't stop playing poker. I played poker the whole time. Sometimes I get a call at like 3 a.m., like your positions are moving against you, you got to come into the office. And I remember, this was in New Jersey, just being freezing cold in the winter and like getting up. Oh, it was rough. So basically in '08, the firm blew up. I mean, we went on our own, but then it was just too volatile. The strategy didn't really work.
Right.
You're basically selling volatility. It doesn't work when the volatility is that high. So after that, I decided to go to poker full time because I was still playing it. I was making more playing poker than at that job. So, I went for it, and that was quite a leap because, there's no guaranteed salary, there's no 401k, there's no raise to match inflation every year, right? It's like you're
Right.
on your own, and there's no career you're building. Like if it doesn't work out, like you got to start over. It's so it was a really big leap of faith, you could say, and I did that for almost 10 years, playing full time. Um, and it's so similar to trading in so many ways. It's really a game. So, with software, I played all online. I would play between 12 and 16 tables simultaneously. But
Hmm.
there's software, there's poker tracking software that tracks every hand you play and every hand your opponents play. So you can really dig into your data and see, okay, this guy's the best pro on the site. How does he play? How do I play? And you match up, 50 different things. Okay, this is what I'm doing differently than him. This is what he's doing the same. And you can see, how you can tweak your game to try to play like, whoever the best player is. So I really enjoyed going through and doing like, deep dives into my poker statistics. Um, but at the end of my career, I had gotten really good, and technically I'd improved, but it was really the mental aspect of it because with poker, anytime there's money involved, right, the emotions can really get intense. And I mean, with poker, I just remember going through these like crazy swings. I mean, I definitely had tilt issues. The big thing was I hated I hated having a losing session. Okay, you never want to quit a session as a loser. We call that being
Right.
stuck in poker. You never want to quit stuck. You always want to be up.
Right.
So my friends and I had a lot of poker friends. Sometimes we go in these like 15-hour straight sessions of just nonstop playing 16 tables simultaneously trying to get unstuck. And as you can imagine, by hour 8, like you're not playing your A game, you're not playing
No.
your B game. You're lucky to be playing your C game, right?
Yep.
And you just would just get in these holes and you're just trying to dig out, and it would just be brutal. So the big thing for me that really improved my level of play was the skill of quitting. Being able to quit that is a very important skill in poker that a lot of players, even today, I have friends that have been playing professionally for now like 15 years. They still struggle with quitting. Some of them just can't quit, and that's huge. But at the end, my poker tilt was pretty much gone. I was incredibly patient. I could quit. I was playing better than ever. But oh yeah. So I forgot to mention I had to relocate for poker. So there was Black Friday in the States. They shut down all the online poker sites. I moved to Canada to play on the European sites. I moved back to the States to play through a VPN on the Euro sites. Then they legalized it in New Jersey. So I moved to New Jersey to play. And then this was like 2016. Okay.
Hmm.
So I had been following the markets the whole time, but not really trading. I tried trading in 2013, 2014, but that it was just too much trying to trade while playing. It was just overwhelming.
Right.
Um, and I remember the games in New Jersey were slowly drying up, and I could no longer access these like really sketchy Southeast Asian sites that would allow me to play on. So the games were dying down, and then I remember following the markets, and I remember, the election, right? I remember the market being, futures limit down, right? And then they're even, and then they're up. And then I remember looking at like the weekly or daily, S&P and Nasdaq chart, just seeing like a 2 year long consolidation. And then I'm like, oh my God, like we're breaking out of this. Like, and
Right.
everyone's so bad. Like, this is the start of a new bull market. And I was like telling my wife, like, honey, like, I'm gonna trade now. Like, this is a new bull market. I'm gonna participate. Like, I'm gonna do this, right? Um, and
How did
and
she take that?
she was like, okay, she had a job, so she was, she had a really good job in New York City, working at an investment bank, so she was fine with it. But
Yeah.
what happened next was a little more surprising because I mentioned to her that a friend of a friend was in the Virgin Islands for like some tax benefit, right? And I was like, oh, because I was doing research, I was like, this is crazy because like always knew as a U.S. citizen, you're taxed on your income no matter where you live in the world. You always owe the
Right.
tax man. You can't escape going to Hong Kong or Singapore, wherever. It's not possible. Then I read about Virgin Islands. I did some research, and I was like, Puerto Rico has one too. And I was like, wow, if I can make this work with trading, tax free, wow, that's incredible. I was like, oh, honey, like, what do you think about moving to Puerto Rico? Like, I did not think she would say yeah. I was like, there's just no way. She's so happy here. She's like, yeah, I could do that. And I was like, really? Like, you really want? She's like, yeah, if you want to do it, we can do that. And like she called my bluff. But I said, okay, let's do it. Let's do it.
Hmm.
And I went right from poker to trading for a living.
Wow.
Not trading full time, trading for a living. Very important distinction. I would not recommend trading for a living from the start. But yeah, that's the background.
Perfect. Well, there's a lot to unpack there. First, this might be a completely cliche question, but when you mentioned, knowing when to quit and how important that is in poker, I wanted to ask this. What are some, because I think that applies very well to trading too, obviously with stop losses, managing your risk. What other key parallels? Because they're so similar. There's differences, of course, but what are the similarities and crossover between poker and trading? And how do you think being a very good poker player helped you make that transition to trading the markets?
Right. So obviously there's a ton of similarities. And anytime where there's money at risk and money involved, your emotions get involved.
Yep.
And trying to control or prevent or, deal with that is a major issue in both. I mean, if you play, playing online, you can't see people, right? I mean, you can see the way they bet, you can see the size they bet, and you can tell if someone's like clearly, on tilt, or they just start playing every hand, right? But in person, I got 1% of my play was in person. But playing in person, like you can see people like get visibly red. I mean, you can see people go nuts at the table. Guys suddenly are just playing every hand. They're not looking at their cards and they're just betting. Like clearly they're on tilt. Like they've lost it. They're emotionally they are they're done. So a lot of similarities to trading. You see it with revenge trading, right? And I was guilty of that. I thought that going in I definitely had some advantages, but dealing with the trading emotions is I find it much more challenging because with poker the hand is done. I mean the hand online at least the hands are done in a minute and it's
Hmm.
done. You know the outcome. With trading, you might be in a trade for hours or days or weeks or months. You don't know. And that uncertainty is really, really, I mean, that's so difficult to do, because as
Right.
humans, we crave certainty. We
Hmm.
crave it more than anything. We want that feeling of control. And in trading, it's out of your control. You control where you exit, you control where you enter, but the way the stock moves is totally out of your control. So that is very difficult. Let me see. I have some notes about the similarities.
Yeah.
But yeah, no, geez, I mean, the money at risk and the emotional control are the two big ones, I would say. And what
Yeah.
was the second part to your question?
No, I think that was it. The
Okay.
similarities. And when you first picked up trading in 2016, what what was your strategy then? How did it develop over the next few years? Take me through that trading development
Sure.
progression, because I'm sure
Sure.
there's a steep learning curve there, especially when you're
Oh yeah.
doing it full
So,
time.
definitely can slim, Mark Minervini, I attended the Master Trader program in 27 end of 2017, which was
Hmm.
like very helpful. The thing I did at the start of trading, which was smart, I thought, was that I traded with a relatively small percentage of my net worth.
Right.
So I traded not only with a small percent of my net worth, but I kept the risk very much under control. My max position size was a 0.5% of my account. Okay. And I was
Hmm.
thinking, we'll start small. We'll see. So we'll start small and see how what happens. Okay. Because we didn't move in 2017. We moved in 2018. Okay. So I
Hmm.
had a full year of 2017. I was profitable. I was up, I want to say 50%. Okay. In percentage terms, because in dollar terms, I added money at the end of the year and then I had a drawdown. So in dollar terms, I was flat. In percentage terms, I was up, if that makes sense.
Hmm.
And that's when I heard about Puerto Rico and mentioned it to my wife. And she's like, let's do it. And I remember talking with her. She's like, you know what, so like give me like a worst case scenario here, right? I'm coming off a good year. I'm thinking, what's the worst could happen? Up 15%, up 15%. No, that sounds pretty. Yeah, let's keep it conservative. And obviously, it went a lot worse than that at times. So, yeah, somewhat of an expectation breaker for both of us there when we moved.
Yeah, yeah. Walk me through what happened. Did you experience a pretty large drawdown and have to kind of work through the emotions and everything that went with that?
Right. Right. So yes, yes, multiple large drawdowns. And the thing with poker is that, with poker, especially because so I should note at the end of my poker career, I switched over to pot limit Omaha so I initially played no limit Hold'em. I switched over to pot limit Omaha, and the edge you have in Omaha is much smaller than in Hold'em.
Hmm.
So you're working much smaller edges, just the nature of the game, the edge is smaller. But so you're trained on any time you have any kind of edge, you just bet as aggressively as possible to maximize. Like if you're a 53% chance to win, you're just putting all your chips in. You're just in, right?
Hmm.
So with trading, I was the same. If I saw any opportunity, I would just be like hyper aggressive, not realizing that, in poker, no matter, if you have aces, right, you're 80% and hold them to win pre-flop. No matter, it doesn't matter what they have, you're always 80% to win. In the market, that's not necessarily true. There are times where your strategy is in favor and your win rate is going to be much higher and the R multiple is going to be a lot higher than other times where your win rate is going to tank and your R multiple is going to be much diminished. And
Yep.
I wasn't able to differentiate. I didn't get that yet. I just assumed, it's the same every time. I have a good setup. I'm just going to plow in. And you can go through some large drawdowns if your bet sizing is too large.
Yeah. And how do you think over the next now 8 years, what's been the progression and what have been some key turning points looking back that, changed your performance or really
Right.
helped you unlock that next level? What were some
Right. So
key lessons or
right.
yeah.
So the big thing is going through your trading. I can't stress that enough. Minervini has it in his books. You have to go through your trading and see and see what's going on, right? So for me, it was the drawdowns. I was a boom and bust trader. A
Hmm.
100% boom and bust trader. I've had the opportunity this year. At the Minervini Gala, I got to meet so many incredible people, so many traders, and I got to speak with so many of them. And I realize now that, I mean, Minervini says this too all the time that there's two kinds of traders. You're either a boom and bust or you're risk averse. Okay, and you can be a profitable risk averse trader. You can be a losing boom and bust, vice versa. It doesn't matter.
Right.
So I was a profitable boom and buster, but the give backs in account equity were just, I'd be up 50%, 100%. Then give it, almost all of it back and just start over. And it was just, it's incredibly emotionally frustrating to go through that. So the key for me was learning how to control the drawdowns, and that really had to do with position sizing and progressive exposure. Or, I mean, that's another way. I mean, I think of it more as like an anti-martingale strategy, right? Where, as you win, you increase your bet size. As you lose, you decrease your bet size.
Right.
I've met a lot of traders in Puerto Rico. A lot of people, they see the opportunity here and they go for it. And I've met a lot of traders here that, it doesn't work out. It's an incredibly competitive game and a lot of people don't make it, and that's the sad reality. It's very very difficult to make it trading for a living. And a lot of guys, they traded at firms, they traded at private hedge funds or firms, and then they try to make it on their own. And you know if they go over their risk, right, no one walks over to tap them on the shoulder and say, hey, you're
Right.
cutting, right? Like you had a lot of size on. Like is this a good idea? Right? There's no one there. Like you're there, you're on an island. You're by yourself. If no one, no one's coming there to save you and forcing you to close it out. Like you have to do that. You have to push the button. And that's very, very difficult when, if it's a lot of money to you, if you've got a large position, you get really emotional and it's hard to think and see clearly at those times.
Yeah. Literally on an island.
Yeah, yeah, yeah.
Yeah. You mentioned edge a few minutes ago. I love to hear your definition of edge, both in the poker sense and then also in the trading sense, to see, is there a difference there? How do you kind of approach that? What are your kind of thoughts and how would you define what an edge actually means?
Yeah, yeah. So in poker, it's simple. I mean, if you can get the money in when you're mathematically ahead of your opponent with the cards, right? Then that's an edge, right? If you can
Yeah.
just consistently do that over and over again, that's pretty straightforward. With trading, geez, I'm not sure how I would define my edge. I try to keep my trading now as simple as I possibly can.
Yeah.
When people ask me what I do, I tell them, I buy stocks going up. That's it. I mean, that's the strategy. I buy stocks going up. And they say, well, that's so, like, who wouldn't do that? Obviously, why would you not? I'm like, oh, no, no, no. You'd be surprised at how many people buy stocks going down. A lot of people like buying stocks going down. And then they go, oh, wow, huh? Like, I never thought about that. I'm like, yeah, I try to keep it simple. And then the game is, can you get on the fastest moving stocks going up and not get knocked out of them and be on for the ride, right?
Right. Yeah, I'm thinking of that meme where it's like a distribution graph where on the left hand side is the simpleton, the
Yeah, yeah,
straightforward
yeah.
guy, buy stocks going up, and then in the
Right.
middle at the peak is valuation, all these
The
metrics,
evaluation matters.
DCF,
Oh, the P's are too high. Well, and
and
then,
And then on the far end is the expert or whatever, the
Yeah,
genius buy stocks going up. So
right,
but
exactly.
it's so true. And then there's also, of course, the other layers that you mentioned, position sizing,
Right,
knowing when to bet. There's so many
right.
nuances to it.
Yeah,
And what's interesting to me, looking, of course, at poker versus the markets, is how many different factors, how many more factors are in play in the markets. You've got environment, you've got the individual stocks, you've got, is it the right stock at the right time? How do you think about, that versus a kind of closed game where, like you said, you've either got an edge or you don't, and that
right,
gives you certainty that, but
right.
yeah,
This is the thing. So this is the point I was gonna make, but
yeah,
poker is a relative skill game. Okay, so for example, you are the 10th best player in the world. You only play the nine guys better than you. You will lose all of your money. It's just
hmm
a matter of time, right? Likewise, you could be a terrible poker player, but you find guys worse than you to play with. You're going to win all their money. There's a lot of incredibly famous, successful poker players that, I mean, like take Dan Bilzerian. I mean, he's probably the most famous poker player in the world, right? He's probably, he's a decent player, but I wouldn't describe him as world class, but he's probably won more money playing poker than anybody ever because he finds
he plays
incredibly
the right
wealthy
folks.
businessmen that love gambling with him, and he beats
Yeah.
them, right? So, I mean, that's poker, right? Trading is more of an absolute skill game, right? I mean, you're trading is really, you're battling you. It's you versus you. The person that's going to win, the person that's going to, it's you. And that's probably the hardest part for people that, the ego gets involved. Geez, yeah. I mean, I have a friend I mentor, and I always tell him, look, the person in the mirror. I mean, that's who you're fighting with, right? You're not really fighting the market. It's like, can you do what needs to be done at the right time without
Right.
hesitation and without regret, and without fear, without all these emotions? And so
Yep.
I feel like I keep getting off off target of what you're saying, but I just go into these random tangents. Yeah,
No, that's perfect.
yeah.
And getting back, I guess, to your journey, what were some trades that really stand out looking back? And they could be big gainers, they could be big losers. Basically, I'm looking for, an instance or a trade that taught you an important lesson that then you now and go apply to
Right.
future
Yeah.
trades.
So the one that always is, you can never forget your biggest loser, especially when it's because you broke a rule. And I mean, this was mentioned in the Business Insider article, but buying SVXY, the first time, that was probably the first time I ever put a trade on and didn't have a stop.
Yep.
First time ever. And I remember buying that, you know, and the market closed and it starts gapping down. And the expression "deer in headlights." I mean, you always you read that expression and then you think like, and then it happens to you. And I was a deer in headlights. I was frozen. I was just watching it tick, 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 just like just stunned. I mean, I just remember like I could feel my heart beating and the adrenaline pump and just frozen there, just watching it, unable to do anything. And eventually, I was able to exit, but just in like complete shell shock. I mean, just could not believe what was happening. Yeah. Oh, so that is yeah. That I mean, that's the worst trade ever. But after that, I always had to stop.
Yep.
And thankfully, I learned it relatively early on in early 2018. Because the market has a way. Any mistake that you make consistently will eventually cost you. It's just a matter of time. And I've met a lot of traders here who the thing with trading, especially trading for a living, which is so different than poker, is that in trading you can lose it all in one trade. I've met many, not many, but I've met several traders here that literally lost small eight-figure accounts
Yep.
in one trade. So it really keeps you humble and keeps you on your toes because all it takes is one bad trade, like one really really bad trade to lose everything.
Yeah.
I mean, so yeah, that the worst trade I can never forget that. And then the best trades, oh geez, Tesla 2020, coming out of that, the COVID bear. I mean, that was like my biggest trade ever until Nvidia this year, last year. But
hmm
I had a lot of I think I had over 100% of my account to that on that initial power play slash base where it broke out and went up, I don't know, 50% in like 5 days or something.
Yep.
I have another trade I'll never forget. VIPs in 2014 when I was trading part time. Um, I was telling someone the story the other day. So I was trying to trade while playing poker, and I was trading more of a position trader style. I would use the 50-day moving average as my trailing stop. Okay.
Hmm.
And I remember the market pulled back, and I had like, I don't know, 10 position, 8, 9, 10 positions on, and I got knocked out of every one except Vips. That was like the leader. I mean, that one, it was super strong. And I remember it, everything stopped me out except that one. It bounced and it started pulling back. It was like a point above the 50-day. I was like, you know what? The market's weak. It's going to roll over. It's going to stop me out. I'll just save myself $1 and I'll exit. And of course, it did not pull back anymore. It just went up from there. And at the end of the year, I think I don't remember if I was down marginally or flat. And then I went back and I was doing an annual review, and I was like, oh wow, if I had held this and exited where I was supposed to, I would have been up, 40% for the year,
Right.
right? That one mistake cost me a 40% return. And at that, I was just so frustrated, and I was like, I can't do this. I'm done. I cannot do this while playing poker. I cannot be this distracted because I'm trying to play poker in European hours during the day, and I'm like, I'm like playing poker. I'm looking at, I'm looking at, I'm just constantly looking at the screens, watching the stock trade while, and you can imagine the emotions where you got a lot of money here, you're winning, losing. You got a lot of money there, you're winning, losing, and it was just overwhelming. I just can't
Yep.
do it. I cannot trade while playing poker. It's just way too much way too much. So I stopped and just focused on poker. But I can never forget that trade.
Perfect.
And that's the perfect
Yeah.
example of the Livermore quote from Reminiscences. They don't beat themselves, or the market doesn't beat them. They beat themselves. You know, perfect example. Yeah.
Excellent. Um, Christian, I want to get more now into your trading style. First, from a very high level, how would you kind of describe what you try to do? Obviously, buy stocks going up, but maybe a layer below that. I know can slim is your roots, but how have you kind of changed and applied that? It sounds like you're trading faster stuff maybe than a classic position trader might do. So how would you kind of classify yourself and describe at a high level what you
Yeah.
try to
So
do?
I would say if you read the Mark Minervini books, like I'm looking to buy VCPs, power plays or high tide flags, and then I will also trade episodic pivots, which from stock being Qualamagi. Those are the three
Yep.
big things. My preference is to buy a episodic pivot out of a VCP or a power play. That's my preference. Yeah.
Perfect. And I know you prepared a few graphics. Maybe do you want to share that now or maybe a little bit later?
Uh, yeah. It was yeah. So my graphics are more just showing what I would do to review my trades. And I know a lot of people on Twitter had questions about because if you look at my stats, they don't really warrant such a large return. So I wanted to show them how the average numbers can result in those kinds of returns. Because if you just look at my numbers, you look at the average returns, you're like the math doesn't really work. But so I wanted to show people how that math works out.
Yeah, let's start there and then we can
Okay,
we can
sure.
take it from there. That'd be great.
Yeah. So these are my stats for 2024. You can see these are the average numbers there. I posted that on Twitter. Um, so the with only okay. So with this, I have it broken down by risk down here, so you can see that those 400-ish trades. You can see how impactful when I sized up versus when I did not. So you can see, like this average R per trade, right? When it's, 0 to 0.25%, and most of these are closer to 0 than 0.25. But you can see that, the win percentage and the average R per trade, like those trades are, they're meaningless basically. Like they really have no impact on the performance. Even the
Right.
0.25 to 0.499, you can see the average R, but as the size increases, and then you can see, it really, heavily weighted on the trades where I risk more. That when I have conviction on the trade, I size up. I really go for it, and you can see on the average gain, um, that's how I did it. Um, you have to size with conviction into your A plus setups. And how do you know what's an A plus setup? Well, you have to trade for 7 years, diligently recording every single thing you do, studying, uh, past model stocks constantly. I mean, it's the only way. And then, if you see my notebook, I mean, you can see, what I have here with, going back to the 1930s, and every single year I have, I probably have, I don't know how many, hundreds of stocks that I reviewed um to to see, what works and what doesn't. The Qualmagi where he suggests you have to go back and do the work and you have to do the deep dive. it's the only way to have the conviction to size up and to be able to hold through the inevitable pullbacks.
Yeah, and could you maybe talk from a high level what you've done for each of those years? How did you find the stocks to review? What did you do to break down each one? And if you're willing to show one as an example, that would be great.
Sure. I mean,
But
well,
if yeah,
yeah. So you can find it on Twitter. I mean, Twitter's an incredible resource. There's so many traders that share charts. I mean, you just find the stocks that have gone up the most, and then you just go back and on TradingView, and you can find them. I mean, like, all the Mag 7, they're up, 50,000% since IPO. You can just go back and try to find a VCP, a power play, an episodic pivot. So for me, I traded through a lot of this or followed the market through a lot of it. So I know what the big winning stocks were for each year.
hmm
So, Roku was a big winner in 2017. You can see, I have it here. That was like the initial episodic pivot. Um, I have, Overstock was a crypto power play back in 2017. That had a huge move then and in 2020. The cannabis stocks were hot in 2017. CGC had so yeah, I mean, I just go through and I remember all the big winners, and I just go back, and it takes time, but it's worth it. I mean, if you want to put up the big numbers, you have to do the work. There's no shortcuts. If there were, I would have tried to find it, but there sadly are not.
Yeah, perfect. And speaking on an individual stock level, say you're going through CGC, what are you doing to try to glean something that you could then apply to the future? What are you trying to break down? Are you going bar by bar through the price action? What are you kind of actually doing when you're analyzing CGC in 2017, if that makes sense?
I'm looking for VCPs and power plays and episodic pivots and seeing how they trade, and that's really. And then I'm looking for historical similarities. So like Nvidia in 2024. I really, when I was watching that set up, I remember. Well, here, let's go to my trades for this year, so I can
Sure.
Nvidia 2024. So this, I mean, this was like a textbook. Let me enlarge it so you can see better. To me, this was a textbook VCP with incredible fundamentals, accelerating earning, sales, and margin, a code 33 from Intervini, and it actually lagged the market near the breakout point. The market took off and it kind of held back, and I remember seeing on Twitter a lot of people like doubting it, like, oh, it's lagging, it's not. And I was like, Netflix did the same thing in 2010. I mean, I wasn't actively trading then, but I just remember studying that leader over and over again. It rallied before the market. The market caught up, and it lagged. And this is actually right out of Minervini's book too.
hmm
Um, and he talks about how the leaders, it's still a leader. It's just it needs time to digest. It just had a huge move. So Nvidia went from 100 to 500, right, in a very short period of time, and it just needed time to digest. And then so those two arrows there, those were the buys. So yeah, that's the breakout. I mean, I could go back to Netflix 2010, but that's the breakout there. And then where I took profit. But this is a great sell like into strength, but it was I, I'm happy because that was like a life-changing amount of money when I took that trade, but it was not a very good sell. Even though it was a good sale, it really wasn't, because a leader coming out of a base at the start of a new bull market, especially if it's the leader, it's going to go a lot farther. But I couldn't emotionally hold it any longer. But obviously a fantastic. I'm not complaining. It was incredible. One of my best trades ever. But
Yeah,
yeah,
let's
I was actually thinking when I was saying, like O'Neil would be looking at a spot to buy more. He wouldn't be selling it here. He'd be looking to buy more.
right.
Um, but yeah, that's where I sold it. Yeah, and then you can see. I'll go to the next slide so you can see where it. So at the time, you're like, oh my God, it's so stretched. It can't possibly go any higher. And then of course, it's gonna go a lot higher. Yeah.
Yeah. So you're taking these screenshots in real time, or is this something going back?
I
You
went back. I went back, but that I just wanted to show the trade on the entry and exit for
yeah.
Nvidia. Yeah, these are more like my the trades that had large impact for the year.
Yeah, perfect.
Yeah,
Maybe go back to the previous one because I want to break down your entry, and I've got a few questions there on that one. So
sure.
talk me through the pivot point or the actual entry tactics that you use. So obviously the
Right.
overall setup is the VCP. Where are
Right.
you typically looking to enter a VCP? Because this is a little bit before the real base pivot breakout, the standard base
Right.
pivot. So yeah, talk me through your entry here. What were you thinking in real time? How did you size? How do you manage risk? All those
Right.
details would be great.
So the initial arrow, I probably took a 25% position, but I think it was like 1% of account equity.
Hmm.
And I used, I believe that the low of the previous day, but usually I'll use the low of the day.
Hmm.
And then on the next day when it gapped up again, I bought a tiny amount at the open, and then as it went through 500, I just put literally every dollar they would let me buy into it at $500 a share, and using the low of the day. So the low of the day was 495, so it was a 1%
Right.
risk for 150% of the account or 200% of the account. So it was a 1.5 to 2% account risk, and it went up at a 45-degree angle for the rest of the day and closed at the highs and kept going after hours. So yeah.
Yeah, perfect. And in an alternate universe, obviously it closed amazingly well that day.
Right.
If it started reversing intraday, how would you be managing risk in the moment? Because obviously that's a lot of sides, that's a lot of risk to have
Right.
on. How would you have dealt with that if instead of a great close, it started pulling back and revisiting $500? Would you be piecing out of it into strength, trying
I
to
would
keep it
I
peace?
would be reducing. I wouldn't feel comfortable holding that much size when I'm like at break even. But this is like the one time the entire year. I mean, this is like a once a year kind of thing where I'm going to be that aggressive. This is not I'm
Right.
not putting in that kind of size on a regular basis. I mean, my like my average position is 17%, right? So, that is not normal. But when you see an opportunity like this, as a poker player, this is what poker taught me is that when you see an opportunity, you have to really size into it. You have to go for it when you see the opportunity, when all the stars align. So yeah, I went for it.
Yeah, perfect. And just to kind of set the stage, because I know we'll be going through a lot of charts, do you mind talking through the indicators you have on, how you might use them? Obviously, I'm sure you'd agree price action above all else, but how
Right.
do you like how do you like to use everything to help inform your analysis?
Right. So, I actually added this earlier or later in the year. So I wasn't even looking at any of this at the time. It was just the price with the moving averages. But, this is the average daily range to tell me how much the stock moves every day. And then the
Hmm.
NCFD it's basically just a short-term breadth indicator. It's
Hmm.
the percentage of stocks. I believe it's above their 5-day moving average, but I could be mistaken. But it's basically, if that gets hot, uh, you should probably, not be as aggressive because in the past I've gotten really aggressive after everything's had to move,
Right.
expecting it to continue, and it's actually no, like everything just got, like you're chasing, everything just got extended. Like now is not the time to buy. Like you need to wait. So that's there to keep me, I'm like,
In
oh my
check.
God, everything's moving. Like let's buy. Then you see that you're like, oh, it's like 90% of stocks are like short term overbought. Like okay, maybe you should like chill out a little bit. So that's what that is there for. And then the
Oh,
TDV is the total dollar volume. So you can see, I mean, it's just volume really.
yeah. Perfect. And then on your chart, is that the 10-week moving average, the stair step one,
Yes,
or
yeah,
yeah,
10 yeah, 10, what is it? The 10, 20, uh 50, 10 week, 150, I believe, and 200. And then I have the ATR multiple from 50. So that's like when the stock gets extended, the yellow dot will appear. Yeah.
perfect.
Yeah.
And using Nvidia as an example here, of course, but taking a step back, for an entry, what are you looking for in terms of for a VCP entry? What are you looking for in terms of price and volume as it gets primed, as it gets really mature and ready for an entry? What are you looking for in terms of price and volume
Yeah,
action?
you just want volume to dry up on the declines and to increase on the rallies. I mean, this is all textbook Minervini, O'Neil. I
Hmm.
also want the stock to be at an all-time high. I mean, that's really big. The green line breakout from Dr. Wish is just that's massive. I mean, all my best trades have always come when the stock was at or above or right below an all-time high. I can't stress that enough. That's something I did not look at for the first 6 years. I noticed it, but it wasn't like as big of a deal. But go to your monthly, go to your weekly charts, go back to your trades. Look at the where were your best trades? What were your best trades? Go to the monthly and look. Were they at all-time highs? Were they at all-time lows? Were they somewhere in the middle of that range? And I found that my best trades were always at all-time highs. You really have to put in the work and analyze your trades to see what's going on and what works and what doesn't. And that'll give you the conviction and the knowledge to know what your A plus setups are and when you can size because really it's really the game is really about being able to size into your best setups. I mean, you can see,
Right.
that was the return this year was the sizing into the setups when the time was right. I can't stress that enough.
Yeah, of your top, do you have a sense? Obviously, Nvidia was one of them. Do you have a sense of your top three trades? How much of your return that was? I don't know if you've broken it down that
80%,
much.
70,
80%.
80%. I mean, it was
Yeah,
Nvidia on the first base, Nvidia on the second base, and SMCI on that huge base. And that was, I mean, Nvidia was like 80% of my profit this year. So I mean, yeah, it was Nvidia and SMCI were like, a huge amount of that return. Because once you're
excellent.
up 100 or 200%, right? You don't need that big of a gain from there to be up 300, 400 or more percent. It's really, small gains compounded will do wonders. Yeah.
Excellent. And then coming back to this NVIDIA chart, after the breakout, what do you look for in terms of good action post breakout? Obviously, this one acted phenomenally well, just, didn't even test that moving average
Up
really
every
until
single
later.
day. I mean, it was up 17
Yeah.
out of 20 days, and the down days it was down like a fraction of a percent.
Yeah. But for a less monster stock, on pullbacks, on tests and moving averages, what are you looking for again in terms of price and volume action to say, all right, this is still healthy. This is just a natural pullback. I'm going to stick with the trend. The trend is still in force.
Well, I used exit rules from Qualamagi. He's one of the greatest traders I mean, he's, the last, I don't know, maybe ever, you could say. And it's really simple. You sell half into strength on the first 3 to 5 days of a rally, and then you just trail the rest using the 10-day moving average on a breakout. On an episodic pivot, you can sell some to strength, and then you can trail using the 10, 20, 50, all three, pick one random. I mean, it really doesn't matter as long as you're, holding some and allowing for the possibility of a bigger move.
Yeah,
So,
perfect.
so I mean, the price action alone, I mean, whether it's wiggling or not, it's really just really it's about capturing the trends. Oh, that's another thing I wanted to show, but maybe we can skip to that now, or should we
Uh,
keep going?
while it's fresh, go for it. Yeah.
Sure, yeah. So I wanted to show the difference. So so let me go up. So I had this ready. So those were my let me see my stats. Right. So these were my stats. Wait, no, that's not it. Here it is. Okay, back. Yeah. Okay. So these are my stats. So you can see 213R. Okay. So these are my stats. So this is a huge exercise, which convinced me that you got to trail using the moving averages. Okay. So my return last year was 213R. If I just use the 10-day moving average as my stop, literally, you're in the trade, you're not even watching it. You just literally you check at the end of the day, did it close above the 10-day? If so, you hold it. If it closes below, you exit. My R would have been 290. So I would have gained 77 more R if I just used the 10-day as my trailing stop. Okay.
And
You
this
can
is from
see
your real entries.
these are
This is
my
just
my entries. And
yeah.
all I did was I just went back, I copy pasted my spreadsheet and just did okay, 10-day on every exit. Boom. Here's
Right.
the result. An
Right.
extra 73R. Okay. You can see the average gain is higher. The average time held winner is longer. The dollar P&L would have been 24% higher, and it actually would have been even higher because that doesn't account for the compounding that would have taken place earlier in the year, right?
Right.
Then here's the 20-day. Now I go from 290R to 590R from using the 20-day as my trailing stop instead of the 10-day. You can see the average gain is now 24%. The average day for winner is 34 days versus 16 days. And my P&L would have been 145% higher, which I mean, it would have been even higher if you account for compounding. Now, of course, would I have been able to take 400 trades if I was still holding on to all these winners? Maybe not, but with portfolio margin, they'll give you a lot of buying power, so it's certainly possible. Um, and then I also did using the 50-day as my trailing stop. It would have been 600R, and the average gain would have been 27% with an average day winner 50, and the P&L would have been 170% higher. So that's another thing I did, which really, you really have to go through your data and see, what happens if I change my, instead of exiting like, it's up, I'm happy. No, like use the 10-day, use the 20-day, go back, change all your trades from the previous years and see what happens if you use a different exit. Try different exit strategies,
Right.
half the 10-day, whatever it is. But you just look at this and you're like, wow, like my results, I would have been up, 200% more if I used a longer term moving average. And it's really just those few big winners I had, if you're in it, like Rocket Lab, right? I'd still be in Rocket Lab if I used the 50-day. I'd still be in what's the other big one? I'd still be in Reddit. I'd
Yeah.
still be in a lot of these like big performers if I used a longer term moving average. But emotionally handling the profit volatility, is very hard because when these names pull back, they all pull back simultaneously. So you
Yeah.
could easily see, a 30% drawdown in open profit. And, most people can't handle that kind of, I can't, I know I can't hold for the, there's just no chance. There's no way I would panic sell at the lows if I tried to hold for the 50. There's just no chance. I would sell before it got there. I just couldn't handle it. So I sell into strength and I try to trail some with the 10-day, but I know the 20-day is better. I know the 50-day is better, but having the mental fortitude and the stomach to do it is a whole nother thing. And I also size large, so I could probably hold to the 20 if I size smaller, or if I just trade. If I didn't have my entire net worth in my trading account, maybe I could handle it a little better. But
Yep.
yeah, yeah. I just wanted to. I think that would be helpful for people to go back and use that, because that was really eye opening for me, was to go back and see what happens if you use having different exit strategies, right?
Yeah,
Uh,
and this is similar to what Mark Minervini did with his stop losses in his book, which I think is
right.
is a great exercise. I cut you off there. Was there anything
Oh, no,
else you
no,
wanted
no,
to add?
that's a great
Yeah,
segue, because that's the other thing I wanted to show was that what was another big thing that was an eye opener for me was what happens if I cap my monthly losses. Okay, so for me, I always cut my losses quickly, but the problem is the losses would get out of control. I would have so and I would risk 1% per trade, because in his book he says 1% per trade minimum to 2.5 maximum, right? But that's just too much. I mean, I would put on too much size all at once. I put on four trades at once, and if I get stopped out of all four, I'm down 4% for the month, right? And then you put four more on, and then you're down eight. It's like before you know, you're like, wow, I'm down double digits, and it's like, but Mark, he doesn't have double digit drawdowns. How is this possible? Well, because he's sizing much smaller, right? So I just did an exercise where what happens if I just cap my losses at you see it here, cap the loss at 5%, cap the loss at 4%, the monthly loss, right? Cap the monthly loss at 3%, and then you can't see it, but it's like cap the loss at 5%. Then if the previous month is losing, cap it at 2%. And then if that month is, or sorry, if the preceding month is losing, sorry, if you have a 5% loss, then the next month is 2%, and the next month is 1%, right? And the next one is 3, 2, 1, and then the last one is 3, 1.5. And you can see, the difference in results if you just keep those monthly losses small. So that's for the upside. And then on the downside, so these are some of the bad years I had, right? And you can see the difference if you control those losses. You go from losing 36%, which is just way too much. That was a bust after a boom. You can see how the losses just get out of control. But if you cap the monthly downside, you can really control it. And that's what
hmm
was the game changer this year, was that just I cannot allow a monthly loss. I said 5%, but I really don't even want it to get there. I want it to be a 3, 2%. I want it to be small. And once you start losing, like, you just have to cut size. That's the anti-martingale thing. You just cannot get the losers. You let the losers get out of control. You just have to. You have to cut size. Yeah, as a recovering boom and buster.
yeah. And it's funny. Going back to what you said about the two different types of traders, I put myself much more in the risk averse camp, where I've had to kind of push myself to become more aggressive at the
Right.
right points and size bigger. While it sounds like you and I know many other traders start with the boom and bust, where you can make tremendous amounts and risk, and that's no problem. But then you
Right.
have to deal with managing the drawdowns, managing that. I'm kind of coming from the other side and having to work my way up to be able to risk more and size large and all that, and that's been really good for my performance. But that's been something I'm personally working through
Right.
to improve at that aspect of trading.
Right.
So
So first off, I actually had a whole segment I wanted to talk about this. Uh, yeah. So first off, a risk averse trader, you have to understand that traders are probably the top, I don't know, 10%, 5% of the general population in terms of willingness to take risk. So you are risk averse, but only compared to other
right,
traders, right? So, like, you're in the top 5% for risk taking, but we're comparing you to the top 1%, the top 0.1%, the top 0.01%. So it's not that you're risk averse, it's just compared to those guys that are, like, psychotic, right? You're, like, relatively conservative, right? Because all my poker friends would always tease me about how I was, so risk averse. I'd be very conservative when I played, but you're comparing yourself to, like, a very selective group of players, right? So yeah, so boom and bust. I mean, this is me to a T. Huge booms during bull markets, huge givebacks during unfavorable market environments. The bad environments affect your mental state, confidence, conviction, etc. High chance of blowing up and then getting discouraged, quitting during the bad times. And Minervini says in his webinar, boom and bust traders, they have the best chance at big gains if, and that's a massive if they can survive or endure long enough to control the risk.
Right.
And then the risk averse have the opposite issue where no large drawdowns, but they struggle to grow their account, struggle to put on size. You have to develop mental toughness to put on size. It's like weightlifting, right? You can't go into the gym and start lifting 400 pounds. You have to start small and then just slowly build it up. And, I actually started off with poker as very risk averse.
Hmm.
I mean, that first time I lost $50, that was like the end of the world for me. Okay. And then you're successful, you win more, and then you have that $100 loss. Oh my God, it's devastating. Then it's 200, then it's 500, then it's 1,000, then it's 5,000, then it's 10,000. And as the money keeps going higher and higher, you just become numb to it. But no, that took years. That took years in poker. I mean, and not just like part-time weekend warrior. I'm talking playing 7 days a week for 6 hours a day. It took a long time for me to be able to stomach those kinds of monetary and emotional swings. And I don't know how guys who don't have a background in poker do it. I don't know how you can be like a normie or just a normal guy working a job and all of a sudden just having these swinging thousands of dollars in a day or having something gap down 20%. I mean, it's crazy. I mean, it's absolutely crazy. I mean, it took me years to get it under control with poker, and then with trading, it's like I felt I started all over again because it's a totally different kind of thing. With poker, once you turn off the laptop, right, it's done. It's over. Like the game's over. You're no longer under that pressure. In the market, it's constantly there. I mean, Minervini says it's like an exposed nerve that's just constantly being pressed. Like, when I have large size on the weekend, right, it's like it's like for Nvidia, right? It's like I'm not sleeping well. I'm not sleeping like a baby. It's like I have 3x my net worth in these positions. Like I'm on edge. I'm like I'm waking up at 5 a.m. like pumped up. Like it's extremely emotional game, and it takes a long time to deal with that. So I completely understand why people are risk averse. It's
Yep.
really tough. It takes time. I really think it's like a muscle. You have to get stronger. Work with like a trading coach or psychologist to try to find what's holding you back, right? A lot of it just takes time. That's what I would say. Um, yeah.
Yeah.
Oh,
I
and then
mean,
I have here certainty versus uncertainty. Oh yeah, so that's the hardest part. So when going through, I mean, I remember a lot of the trades when the trades are putting pressure on you and you want to exit. So this is for me. When exiting some trades, like losing trades, it's almost like a relief sometimes. I would feel relief when I would get stopped out, especially if the trade was like fluctuating, you're positive, you're negative. When you're finally out, it was like relief. It's like you know the outcome. It's no longer uncertain. I don't know if you ever experienced that yourself,
yeah. Yeah.
but it's like you're almost relieved to lose. You're just relieved to get out of the trade because it's finally done. I think that's a really big part of it. And then there's another a book, Best Loser Wins.
Hmm.
I think that's a great book on trading psychology, but he just talks about how average doesn't win in markets. The average trader underperforms. So if you're doing anything that the average trader wants to do, like holding on to losers, selling winners too soon, like you're going to underperform. You have to do almost the complete opposite of what your average trader does. But yeah, boom and bust and risk averse. So I got to speak to a lot of traders at the gala, and most guys are risk averse. Most I would say 8 out of 10, 9 out of 10 guys. Why? Because most of the boom and bust traders they blow up. They don't even get to that point.
Right.
They start one account, they run it up, they blow it up. I'm done. So with the risk averse, you can survive. You have a longer learning curve. Boom and bust. Most guys, one time, they blow up. That was stupid. I'm out.
Christian, yeah, I think this is so key, and it kind of brings me to my next question, which I always like to ask, and it's always interesting hearing different traders' perspectives. How do you personally define risk in the markets, and how do you, as a I don't know, recovering boom and bust trader,
Yeah.
manage that? You've obviously gone through your math and showed different techniques you use there, which I think is excellent. But yeah, first things first, how do you like to define risk in the markets?
I mean, risk is. for me, I would just say it's my account equity at risk. When I put on a trade, it's just whatever I decide to risk. I mean, that's what I would think about. I'm not. I guess I don't really understand, you know, the question that well. It's just
No, that's how
0.25%.
you think about it. You think about it in the mathematical sense. So that's
Right. Oh yeah,
perfect.
yeah. I just think,
Yeah,
0.5% of my account, 0.25% of my account, 1%,
right.
2%. That's how I think about it. I don't really think of position sizing so much. In terms of like, if the 25% of my account is the 50, I think is like this is 1% risk, this is 2% risk, this is
Gotcha.
0.5% risk. So it's like on a 1% risk position, I could have 100% of my account in. If the stop is tight enough, but in a situation like that, I'm only going to hold that if it moves immediately in my favor because there's always gap risk, right? There's always the risk of a gap against you, which I have been a part of far too many times. So
Yep.
there was always that chance. Yes.
And I wanted to ask you this as well. Say you enter on a trade and your stop's low of the day. It's a really good VCP. Setup looks good. All that. What kind of cushion or just I guess market feedback are you looking to have on day one to keep it and give it a chance for the next trade? And what would cause you to just scratch it off and take profit at the end of the day? Maybe you're up 1%, 2%, whatever it is. But yeah, what profit cushion are you looking for day one? I guess is the question.
I mean, the more the merrier.
Yeah.
I don't have a firm number. As long as I don't get stopped out. I mean, it really depends on the general market. But it depends. But if it doesn't hit my stop, I'm gonna try to stick with it.
Yep.
I'm always, the exception would be, I haven't had much traction. The market starts selling off, everything stops selling off. I'm getting stopped out of, multiple positions. Names that were green are now moving back to break even. Names that are barely up are now red. I get stopped out. Everything's just fading, and I just put the trade on, and it was up, and now it's down, and I might just cut it right there. I mean
Right.
that's fine. So, but if it's it depends on the total risk right now to my total portfolio. Depends on the risk on that trade. Depends, is the market coming out of a correction? Has it been rallying for months or weeks or I mean, there's so many variables. But in general, I try to let the stop get hit, but
Yep.
I will cut, and in the past I would do all or none, right? I would just cut the entire position, or I try to be more incremental now. I
Hmm.
think that's much better to be incremental. If you're unsure, cut half. Cut three quarters, cut a quarter. Whatever it is. But it depends so much on the market.
Excellent. And jumping topics again here, because I wanted to ask this. When you mentioned the three setup you use, what what number or sorry, what percentage of trades you think is an episodic pivot versus a VCP breakout, or does it really just completely depend on what the market gives you, right? Because there's going to be times
Right,
where it's a VCP market, and then there's going to be an
right,
earnings gap season where everything is gapping up. So is it
right.
is it do you prefer trading one, or is just really what the market presents at that time?
I prefer actually trading episodic pivots because it's so clear cut what to do.
Right.
You buy at the opening range high, you slap your stop on at the low of the day, and then you can just walk away. I mean, it's really that simple. Not easy, but quite simple. The VCPs, when they break out clean like Nvidia, it's like a joy. I mean, they just go up, right? The problem is when there's volatility at the breakout level. You buy it, it squats. It sells off the
Right.
next day. You get stopped out. It resets back up. You buy it. It squats again. You get stopped. That's incredibly frustrating. In a choppy environment, and that's where the progressive exposure is so key. If you look at your last 10 trades and you've lost 9 out of 10. You know, what should your position size be on number 11? Like, should you size up or should you size down? Like,
Right.
it's just, when you put it like that, it's so straightforward. But in the heat of the moment, it's it's like, no, no, I'm down money. I want that money back. I want it back right now. And the only way I can get it back is this next trade. So let's size up and go for it. And then you lose that one. And it's like, oh, I should not have done that.
Right.
What do I do now? Right. So it's, yeah, when you find yourself in a hole, you got to stop digging. And in the past, I would get a bigger shovel and dig deeper. And then, oh, this one, I need something bigger. I would just keep digging, and you can get into pretty gnarly drawdowns. And before you know it, you're down 35% in your account, and you're like, wow, I need a brand new bull market to double just to get back to even. So I can't stress enough how important it is to keep the drawdown small. I mean, I could just our conversation could just be me saying that for like, 2 hours, just,
Yep.
keep the drawdown small, keep, as a boom and buster and to all the other boom and busters out there, that's what you have to do. Like you can make the gains when the market's good. When it's not, you have to stop. And that's very, very, very hard for a boom and buster. And I know.
Yeah. And there's the mental side of thing and the financial side of thing to
Right.
keeping your account as close to equity highs as you can.
Right.
Because, yeah, like you said, if you think about, wow, now I need to double my account just to get back where I am, it's just it's a slippery slope mentality where you can really get negative very, very quickly.
Oh yeah.
And just keeping those losses small in the first place is the best way to, you know, help your mental side of things as well.
Absolutely.
So,
I mean, that's a
yeah,
huge advantage the more risk averse trader has. They're just not going to put themselves in that kind of position to be at that,
right.
to lose that mental capital, right? To lose that emotional capital because it's huge, having the confidence and conviction in your trading. I mean, you can deplete that real fast. I mean, you can get it
Yeah.
back real fast too, but once you lose it, it's tough because, yeah,
And that's where the progressive exposure helps too is like you said, it's funny how quickly we can get our confidence back. And even a small win with if you take the loss, you know it's a small loss, but even a small win, it's like you're kind of almost immediately, on the up, going up the hill again.
for
Like
sure. Yeah, yeah.
so that's another way that progressive exposure really helps is it caps the losses and then small wins can cascade and
Right,
and help your psychology as well. So
right.
I think that's awesome. Getting back to what you were saying about episodic pivots, do you actually have an example from last year or maybe a recent year of one to go
I,
through?
I have so many examples, but yeah,
Yeah,
I mean, I have one. I mean, the best one I traded last year. I mean, I was
SMCI.
SMCI, of
Yeah.
course. Let me
Yeah, I'd love to talk through your entry tactics a little bit. You mentioned, of course, the opening range breakout, but
right,
maybe for people who don't know, explain what the episodic pivot setup is and how
right,
you learned it and develop, how you
right.
trade.
So this is excuse me, excuse me, Stock B, Pradeep Bon on his website talks about it. Qualamagi made it very famous, but basically, you want a stock gapping up usually on earnings, but it could be on a new FDA approval. It could be on a new business deal. I mean, there's 100 different things it could be on,
A
but
catalyst, a
some
game-changing
kind of
catalyst.
catalyst, some
Yeah.
positive news, and the stock gaps, you know, 10% plus, and there's huge volume pre-market, and then in the first 5 minute bar, there's massive volume. There's clearly huge buying interest. And then you take it over the opening 5 minute range high, and you put a stop at the lows, and you let it cook.
And this one definitely cooked for
This one,
sure.
yeah. So this
Yeah.
SMCI, yeah, I believe they pre-announced earnings and they were better than expected. And
Yep.
I took it on the 5 minute opening range. I might have taken this on the 1 minute actually, because there was so much volume and it was moving so well. But yeah, I nibbled a little bit at the 50-day, and I mean, tiny size. And then I really loaded up on the episodic pivot. It was a perfect VCP, a little deep, but it was good enough coming out of it. Making a new all-time high, which is my favorite setup by far. I've had the most success trading those, so it was just A plus for me. So I size into this one. Yeah,
Talk to me a little bit more about what you're looking for pre-market in terms of volume to get a name like this on your radar
right,
to be ready to execute, pretty
right.
early in the morning. And also how much do you look into the catalyst and how do you kind of judge if the catalyst is worth, could potentially lead to a sizable
Right,
move?
right. I mean, so usually I'll defer more to price action than the catalyst itself. I mean, obviously you
Mhm.
want to see, I mean, usually you're not going to see a 20% gap or 10% gap unless the catalyst is positive, right? I mean, but sometimes you do, but usually the volume isn't really there if it's not positive enough, if that makes sense.
Yeah.
But I mean, if you trade these for a year or two or three, you'll get the hang of it. It's really one of those you need to trade it to really learn it, I guess, to see which ones to avoid, which ones to not. The ones I tend to avoid are ones where, again, it depends on context, but near their lows, near their all-time lows. I mean, you can get some short squeezes. I mean, like Carvana, 2023, right? I mean, that had several episodic pivots, at its all-time lows, and it went up, 4,000%, some crazy percentage, right? But in general, I want to trade them near their all-time highs. I've had more success doing that. Yeah.
Yeah, perfect. And day one, are you taking any profits, or are you just kind of using
No,
the trailing 10-day?
you're
Okay.
using the trailers. But again, that's where I sold it. Again, I did not do that because the position and the amount of money was too large for me. So I sold it early.
Yeah. Well, this was a hell of an opportunity. This was
And
great.
then, I mean, you can see
Yeah.
that so like, I mean, if you look at this chart, you say, wow, this name is, hyper
Extended.
extended, right? It
Yep.
can't possibly keep going up. And then, no, it kept going up. It kept going up. So, yeah, but no, I mean, that was a great trade. But, yeah, if I had followed my, the trailing moving averages, um, but man, that has to be the hardest thing. Finally
Yeah.
you get in one of these big winners, and it goes up more than you can possibly imagine. And your rules say like no 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 like you're not selling yet. You need to hold. And it's like what are you talking? This is crazy. Like, I'm up more than I can imagine. And then but no, I mean it's the holding is the hard part. The holding and the selling is the hard part. The entries. Once you get the entries down, it's not that bad. But yeah, it's very tough to hold. I mean, that's what Kwalmagi says. He's been doing this for a long time and made an incredible amount of money. And in some of his Twitch streams, he would talk about how in 2020 that he couldn't hold it. The stock would be up so much he would just sell, and then it would double again. And he's
Right.
like he still struggles with that. I mean that's the hard part. I mean it's a great problem to have, having a stock double in like 8 days and just being like, oh geez, like I have to hold it. But yeah, it's very hard emotionally when it's a huge amount of money to you.
Yeah, in a sense, the entries can be a lot more scientific. Like you said, breakthrough opening range highs, stop at lows, let it
Right.
sit. But then the selling is like the art that I feel like every trader's looking to get
Yeah.
better at.
Yeah.
And it changes because I was thinking about this when I did a video on doing a trading report card where you look back on your year and analyze stuff like that. Um, and sometimes I see traders do that exercise and um, in a year where we were really trending, it was I need to hold a
Right.
lot longer. And then in a year where it's really choppy, I need to sell into strength more.
Right. So
So so
right.
yeah, it's the environment dependent too. Because
Right.
last year,
Of course.
when you did your exercise where you say to your 20-day, it would have gone up a lot more. It's because we're in a great
Right.
year where
So,
everything went.
right.
Yeah,
So
please.
I did that in exercise. So I wanted to talk about this too. I did that in exercise initially in 2020. Okay. Because that was like, a monster trend year. Right. And then what happened in 2021? It didn't work. If you
Yep.
didn't sell in the first 3 days after a breakout, you didn't make any money. So, so it depends on the market, right? So like in
Right.
a trending bull market, obviously holding your winners longer will work. In a choppy, volatile bull market, obviously holding your winners will not work. So it completely depends on the market context. And usually because the market likes to fool everybody, after a very strong trending bull market, the next year you're going to get something more choppy and volatile, right? Um, so yeah, I underperformed in 2021 because I was trying to hold for big moves. And Mark Minervini, I think like in February he was like, oh look, everything's going up 3 days and then reversing. So I'm gonna sell on day three.
Yep.
And I was like, that makes sense, but I'm doing my trending thing, which worked really well last year, and that does better for me. So I'm gonna do, and then I didn't make any money. So like,
Yeah.
so you have to adjust to the market. I've found personally, it's about recently it's been every 4 years you get a really strong trending bull market. 2024, 2020,
Yep.
I mean 2017. And then the other years tend to be a little more choppy, but it's after a bad bear market, you tend to get a very strong uptrending market. So you could use the 20 or 50 days your trailing stop after a bear market and you'd outperform. If I use the 50-day or 20-day, I'd be up 800 to 1,000% last year.
Yeah.
No doubt in my mind, easily. I mean, it's never easy, right? Some years the opportunity is there, sometimes it's not. But if I use a longer moving average, I would have been up over 800%, no doubt in my mind.
Yeah, it's like progressive exposure. We can coin the term progressive sell rules somehow, where
Yeah,
you're adapting to things and yeah, you're right. Minervini noticed that theme so quick, and obviously he's been doing this for decades, and
right.
that recognition is what sets him apart.
Oh
You're
yeah,
like, this is a year
100%.
where we're selling faster, um,
Yeah,
and
just
yeah,
to add to that, Richard, 2021, if I didn't know, if I wasn't following him through the year, right? Because, that year was brutal, right? And that's like, someone told me that some guy was up 331% trading long only. Like you got to be kidding me. Like what? And then like, oh, it was Mark Minervini. Like, okay, that makes sense. Like if anyone's
yeah,
gonna do it, it's gonna be him. I mean, because that was just, oh man, that was a tough environment.
yeah. I forget what I was gonna. Yeah. So one way, and this is for traders out there watching, just to maybe think about that and notice for yourself whether it's more of a trending environment versus whatever. Is this is something Rye, who's another co-founder of TraderLion, he tracks his average gain over the last 10 trades, 20 trades, and if that average gain is increasing, he's trying to hold longer. If it's tightening up, again, that might be more of a sell and strength environment, choppier environment, whatever you want to call it. So that's one thing to think about for you out there as you're creating your rules, to add to this discussion. Christian, I don't know if you had anything else to add on SMCI, some big takeaways, but I'd love to just run through some more of your trades and maybe
Sure.
if you have some key losers in here as well. That would be great to go through
Right. So,
to run through
the
any
losers,
misses.
I'm happy to say the losers were all 1R. There were no big losers. It was just like I buy it and it takes out the day low and I'm out. I mean, there's
Right.
no real notable losers. Just, I had like 270 of them. Most of my trades were losers. I would just show you the buy and the sell.
Yep.
The average loser was held for like 2 days. So you buy it and it doesn't work, you get knocked out immediately. So I actually didn't put any losers here because to me, they're so unnoteworthy. But
Yeah.
majority of my
That's
trades
good.
were losers, you
Yeah,
know?
were
Yeah.
there any ones that knocked you out and then ended up being a big winner for you because you kept on it and re-entered at the next entry?
Kava did.
Kava.
Yes. I believe I was knocked out. Uh, I had to bring up the chart, but believe I bought that on an episodic pivot, which actually knocked me out the same day. Took out the 5 minute low, and then it like immediately snapped back, and then I took it on like a 30-minute range breakout or hour breakout, I believe.
Hmm.
Or I might have waited for the next day, and then it took out that day's high, something like that. But yeah, that
Yeah.
does happen. Not as often, but it does happen sometimes. It was a fairly strong trending market. It was a very narrow market. It was AI related
Right.
stocks did well. If you were in those names, they trended. Everything else was pretty choppy. But Kava, I recall that did knock me out, and I got back in.
Perfect.
Oh, and
Well,
actually,
yeah.
what Celsius did actually. Celsius here we go.
Yeah.
Celsius.
Let's do it.
Okay, so actually, that first green arrow where I bought it coming out of this VCP,
Yep.
so I had a tiny position, right? And it gapped. So that giant green up bar was actually on earnings. So it gapped and it actually nicked my stop. So I actually literally exited at the low of the day. And then I saw it just ripping back up on volume, and I was like, oh wow, like is this thing gonna shake? Is this thing gonna just shake me out? I was like, oh, like it's approaching the all-time high. I'll just if it takes out that, like I'm just gonna get back in, and I did, and it ended up being a pretty big trade, and I just sold this one into strength. Trying to remember why, but I partialed into strength, and then I just exited the rest when it took out the 10-day. Yeah,
Hmm. Nice. Yeah.
yeah,
Look at the volume on that
yeah,
earnings.
yeah,
Yeah. Leif Serede might call this an earnings pivot through that high, that
yeah.
prior day high.
And then let me find AMD was just like this to me this was like a standard power play. It doubled, formed a base. I took it out of it, and then I sold this one on weakness on that day. I
Hmm.
don't recall the reason why, but I sold it, and I was yeah that I mean but that was I sold that one into strength. Maybe the semis were weak, but I don't recall, but I sold that one into strength. I might have held a little bit for the 10-day, but I had like 400 trades. I was just going back over the trades that were the most, I think were the
Impactful.
largest as a percentage of the portfolio. So these were in February. So those trades made up a larger percentage of the portfolio than the ones later on.
Right.
Uh, and then I had Reddit. This is a textbook episodic pivot coming out of a IPO base. I entered there. I bought it off. That was like a power play ish, and then I exited it when it closed below the 10-day. But if I
That
use 50-day, I still be in this. This one is pretty straightforward.
Yeah,
Kind
that
of
was
like, oh,
that
sorry.
just read it. I entered a little bit up the right side of the base earlier on, and this is my biggest winner of last year.
Okay, nice.
And my buys are the same as your buys. I added on the EP and then added through that inside day, and I added that 3 day pullback after the EP and then reconfirmation up through that high.
Right.
I added
Yeah.
a little bit here, but
Okay.
yeah, this was a great stock last year.
Yeah. Oh, yeah. Yeah. No, this is like, I mean, I have so many historical examples of IPOs that look similar to this. Usually they don't rally out into new all-time highs before their big gap. But I mean, one that I remember, I don't know if you studied FireEye in, I believe that was, I want to say 2012.
Hmm.
I mean, but that's delisted. It was acquired, but it that was like I mean, and let me see if I can find it right now, actually.
Yeah, perfect. Take your time. Yeah, that was cybersecurity name. Is that what it is?
Yes, yes, here it
Yeah,
is. Yeah, IPO U-turn. Yeah, here we go. Yeah, so I mean, yeah. So this is like, I mean, this is like perfection, right? I mean, look at that. Wow.
yeah,
So I mean, yeah, yeah, that was like, yeah. So I went back. I remember this name. No, 2014. Okay, January 2014. But yeah, that's like, I mean, that's like exactly what you want to see. So, oh yeah. So I should mention what got me into the episodic pivots was seeing so many stocks with these monster gaps, and I'd be watching these names. I mean, they'd be on my list. Like I'm watching it for a breakout, and then they would finally break out on earnings, and they would just gap 10, 20, 30%. I'd be like, I can't buy it. I missed it. But like, there's no chance for me to get it because it gaps. And then when I finally found the stock being Paul Maggie, I was like, okay, so you just buy it. Because so many of them would gap and then they just keep going. I'd be like, I can't chase it here. I can't chase it. But it's like, if you just use the opening range higher, you just put a 5% stop. There's so many ways to enter. You can just buy it at the open, use a 5%, 6% stop. You can buy using the 5 minute opening range high. You can buy the next day. You can buy, there's so many different ways to enter as long as you have a stop loss. And I was like, I don't want to miss these because the one that really, let me see if I can, let me see if it's here. It was SE in 2019. I mean, you could bring it up on a chart, but that one,
yeah.
I was watching that stock for like months, and then it finally broke out. And I remember like, oh my God, like, I missed it, but it's like, oh my, and then it formed a power play. And then I remember getting chopped like 5 times trying to buy it out of the power play because it was like so volatile. I just kept getting knocked out. And I was like, this is like I'm making this so much harder than it has to be, like, 'cause I was like, oh, my stops are too tight in the power play. Like I just kept getting chopped up. But getting that stock out of the initial episodic pivot would have just made life so much easier. Because it's just like I'm there at the open watching these things go, and I would just keep missing it. And I was like, you know what? Yeah. And then seeing how Stock B and Paul Nagy entered, I was like, finally, like here we go. Like, well, why didn't I think of this a long time ago? But that was just like it was huge for me.
Perfect. So I
Yeah,
mean,
yeah, this is the one where so I think I bought C. I don't know if you can see my cursor, but
yeah,
I bought it in here and then got stopped out, and then it pulled back and it reset, and I bought it there, and then I got stopped out, and then it reset, and I bought it there, and then I got stopped out, and then it reset, and I bought it there, and then I got stopped out, and then it gapped up on earnings. So I think I entered that like 6 times trying to get it, and then when it finally went, I didn't have any, and then it like doubles from there, and I was like this is crazy,
yeah.
this is making it so much harder, than it has to be.
Yeah, it set up a new base after that and had another gap that just tightened and would have chopped everybody out
Yeah.
right before it went, and then obviously the 2020 correction happened. But
Right.
yeah, this is a good EP to study from a
Yeah,
recent IPO.
definitely. Yeah, I mean the most famous or not famous, but the ones that Facebook, SE, BlackBerry in 2003 had a really big, I think it gapped like 50%. I mean that was a huge one. I mean I can just go through. I mean I have so many. It's kind of crazy. But yeah, I mean if you really want to take your game to another level, I mean this is like to me this is mandatory. I mean I don't know how you could have the confidence to really size
Yeah,
um oops, to size into positions if you're not, yeah. So I mean, I have, yeah,
yeah. Arm.
yeah,
Yeah,
yeah, FUBA, IMGN. I mean, I have a lot. I mean, this is,
yeah. All right. Homework exercise for everybody watching.
yeah,
You have to go through these names for yourself. We're not going to show you all of them, and you have to do the exercise for yourself. We've given you the names here.
these
Christian
are just,
is. Yeah,
yeah. But you can go through and find. I mean, these are just. I mean, some of them I just copy paste. Like Paul Maggi has
yeah.
a few posted, but I mean, you can just, yeah, you can. There's a lot of them out there.
Yeah. So that's for the serious traders who want to improve watching. Go ahead and do that. And leave a like on the video, but also do that exercise. All right, let's keep running through some of your trades from last year.
Sure.
I'm sure there's some other really good lessons there.
Okay. Okay, here we go. Yeah, other trade. Yeah, so Reddit was, a big winner. Then Palantir,
Hmm.
um,
Again, all-time high.
again, gapping on earnings into all-time high. I actually didn't take the earlier EP, but this was like on S&P inclusion, but you could have taken that one. But then again, it gapped on earnings into an all-time high, and it rallied immediately. Like, geez, a lot. And I was like, this is. I mean, it was so stretched. I sold, and then it just kept going. So you're just not going to be able to outperform the 10-day. Like when I go back and look at my trades, I just cannot outperform the 10 and 20-day. It's very hard to do. The one that I'll never forget is Tilray in 2019, I think. I don't know if you remember Tilray. That was a
So
cannabis.
it had a crazy IPO move. Was that what you're talking about? Yeah,
Yes,
2018
yes,
is when it was.
yes, yeah. So I bought that at, I don't know, 30 some 32, and I sold it, 4 days later at 50. Like, oh, you just crushed this into strength. And then I want to say, like, 14 days later, it was at like $300. I mean, it was just like the most insane move I've ever, one of the most insane moves I've ever seen in the market. That was actually, like a on my watch list that I actually participated in.
I think this was a great. I learned so much the past few weeks building this model book. It's
Yeah,
everybody should do it. It's just and it's so fun. It's like
yeah. Well,
yeah,
yeah. So I wanted to say something else about why this kind of stuff is essential if you want to put up big numbers.
yeah.
So I'll just use the USIC as an example, right? So you have, I think this year was like 400 or 500 entrants. I forget exactly how many. Okay. So out of those entrants, right, you're probably talking about the top 20% of people that are like really into, I mean, you have to be into trading to even know about it, let alone enter it, right? So we're already talking the top 20% of the population in terms of traders, right? How many are profitable every year? About 20% in a bull market, 20, 25%. Okay. So you're down to like 100 out of the 500. And then out of those 100, how many are up triple digits? 15, 20 at most. So we're talking about the top, few percent of the top 20, we're talking an infinitesimally small percentage of the trading population. So if you want to put up those kinds of numbers, you have to outwork everybody else. There's just no other way. I mean, you cannot put up those kinds of numbers, without doing that. And then of course, it's more important than just 1 year is to do it consistently, or at least be a consistent winning trader. Someone on Twitter the other day asked me, they asked how long I had traded for. And I said this is the last year was year seven, of trading for a living. Um, and when were you profitable? And I said, well, how do you define profitable? Right? Because I was profitable the whole time. I was up, I was profitable, right? But if you're up 5% 5 years in, like, yeah, you're profitable, but that's not right. And he said, oh well, when did you start outperforming the Nasdaq? And I was like, oh well, year seven. The Nasdaq, if you just buy the Qs, you're going to outperform 100% of mutual funds and 100% of hedge funds. I mean, just look, the mutual funds are trying to match the Nasdaq, but they charge you like 1%. The Nasdaq costs 1% at most. The hedge funds charge 2 and 20, right? So, the Nasdaq is, the performance of the Nasdaq is really good. Like outperforming the Nasdaq consistently is really, really hard. So it's one thing to put up one big year, but I want to be consistently profitable going forward. I don't want the busts anymore. I want to control the drawdown. If I can, if I'm profitable this year, I'll be happy. If I'm profitable the next, because I know sooner or later there's going to be another 2020. There's going to be another 2024, kind of year, right? Where you can put up the 100, 200, 300, 400, if I told you, in 4 years you're going to be up 400%, right? But 3 of those years you're going to be flat, like,
Yep.
yeah, I'd be okay with that. I mean, I'd rather be up every year. I'd rather be up double digits or more every year. But it's really the game is controlling the draw. You have to think long term. I met a guy at the gala who was up 35% last year, and he entered the contest. And he's like, oh, but I didn't want to post the results because I'm embarrassed. I'm like, what are you embarrassed about? He's like, oh, well, those numbers aren't very good. I'm like that number is fantastic. If you could put up 35% a year forever, I mean, you go down as like one of the greatest traders ever. I mean, those numbers are, like really, really, really good. So it's really about long-term consistency rather than, one big year and then, having a 80%. I met guys that had put up 400% returns in 2020, and then next year they were down 70%. The year after that they were down 60%. Uh, boom and bust, right? So it's really putting up the big numbers and then not giving anything back. I mean, ideally you're making money every year. I would love to do that, but you have to control the drawdowns. I can't stress that enough. You put up the big numbers, but I do not want to give it back. I wanted to consistently be profitable, and I think last year was just I said in like one of the interview articles that everything clicked, everything clicked, and it's really if I have a losing year, I don't want it to be -8%, -7%, right? I don't want
Right.
a big double digit losing year. I want to keep it all very very small.
Right. I think that's really well said. That's excellent.
Yeah,
And yeah, do you want to show that Tilray chart just real quick?
sure.
People
Oh yeah,
can check that
yeah.
out.
So this is, I mean, this is like one of the craziest moves I had ever seen. But I bought it on that breakout day at like, I mean, this is, yeah, there we go. It's a
Yep.
little blurry, but that's at 32. And then I sold it on that day. I don't know if you can see my cursor, but
Yep.
on that first gap at like 50, it was up, almost 50% in like what, 1, 2, 3, 4 in 5 days, right? I was like, oh yeah, this is well, what a trade. And then it's hard to tell, but it goes from 50, and on this day it got as high as 300.
Yep.
So it went up sixfold from there in what, 4, 5, 6, 7, 8, 9, 10, like 15 more trading days, right? And if I had used the 10 days of my trailing stop, I mean, I guess I mean, I would have, there's no chance I would have held the whole thing. I mean, I just know myself. I would have sold into strength at some point. But in theory, if you would use the 10 day, you would probably would have exited somewhere around here, like over, $100 a share, which is still, 30 to 100 in like a month is, I'll take that all the time.
Yeah. These IPO moves can be really good. There's a boom phase and then there's the bust phase that often comes with it. But there's a lot of opportunity in that boom phase at the very beginning. Not all of them are going to do this, but PLTR in 2020, Corsair 2020, those are other two good
I
ones
remember
to
those,
study.
yeah.
INMD in 2019, a good one to study. Google, of course, is like the textbook IPO base. What other ones come to mind? You probably have some, I'm sure,
Oh,
in your database. GoPro.
T Pro, Twitter, VJet was like it was like a 3D printing craze back in the day, but VJet was one.
Uh,
Yeah, VJet, yeah, GoPro, Twitter, Alibaba had a brief one. I mean, I have a bunch of IPO charts here too. I have
yeah,
like IPOs.
eBay is a really good IPO to study.
Uh, oh yeah, the China. Yeah. So okay. So I also wanted to add in 2020, right? So or sorry, 2018. I traded that VIX blow up in 2018. And I was immediately at like a 25% drawdown for the year, like in February, right? And I was thinking, oh man, like you're gonna have to claw your way out of this. Like this is gonna be brutal, right? And then there was a rally where I remember the S&P was up, 8% in the rally, but these Chinese IPOs went bonkers. IQ, Huya, Beely. I don't know if you remember that in 2018, but I actually was up almost 100% for the year after that,
Wow.
trading, very aggressively from a, -20 to plus 100. I was like, wow, like, you did it. Like, this is incredible. And then, the market turned, the rally was over, but I kept trading like the rally was on, and I kept trading size, and I ended up giving back. I ended up the year up 20%, but that was like, just a very, disappointing 20%. Because I didn't slam the brakes. I just kept the gas on full pedal the entire time.
What do you think are the key things now, having said that, going forward, you want to keep those yearly drawdowns, in the bad years, as low as possible. What do you think the key things are that you need to change, implement, decide to do that going
Right.
forward?
The
Yeah.
big thing is this initial starting position size has to be smaller, and you only increase size if you're winning. So, and if you start losing, you just cut size. You just cut size until where you're, I mean, some of those trades this last year, I was risking, like 0.05%. I mean, for all intents and purposes, I was trading one share. I mean, just minuscule size until you see things shaping up. Um, so So yeah, I mean that it's really just, like, anti-martingale. If you're losing, you cut size and you just keep cutting until where you're trading where, one share, right? And if you win, then you have that cushion. Now you can draw down, if you're up, 8% for the month, you have cushion. You can draw down 8% and still and be flat. So you can try to get more aggressive and push the
Right.
return. So that's the game. I mean, that's the game. Progressive exposure is the game.
And last year, how were your? I mean, obviously you had a stellar Jan Feb with Nvidia and SMCI, but
Yeah.
how do your returns break down after that? What was kind
Sure.
of your best month and all of that?
Let me, I
You
think
might have
I
shown that. Sorry if you showed that already. Yeah, that's a great Jan Feb, ninety
Oh
percent then
yeah,
thirty
yeah,
percent.
yeah. So I posted this on Twitter already. I think you actually commented, but yeah, I posted this on Twitter. Um, yeah. So that, January and February, that was Nvidia and SMCI,
Yep.
100%. And then the drawdown in March actually would have been worse, but I had AMD and Celsius. March was the month I had 27 losing trades in a row.
Hmm.
And then I think I posted this on Twitter, but in the past, I would have been like a 30% plus drawdown easily in the past. But I aggressively cut size. Once I realized what was happening, because I still had these winners on that were trending up, and every new trade I put on, it was just stop out, stop out, stop out. I'm looking at my account, I'm like, my winners are keep winning, but like my account's not like what's happening. And then I looked at my spreadsheet, just like, wow, like you've had like a ton of losers in a row. You need to, and I just immediately slashed size and kept losing for the rest of the month. And then April wasn't much better. I think it was like 5 winners and 18 losers, something like that. And then I believe May is when Nvidia broke out again.
Yep.
Nvidia set up, and that was when I was ready to size up. So I was trading tiny, 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 and then you get the market leader forming its second real base. It's like there's no such thing as a gimme in trading, but that's the closest thing you're going to get when you get the leader setting up again, super tight pivot after pivot. Let me see if I put that. I should have Nvidia second.
Yeah, I think I saw May
Yeah,
Nvidia.
here it is. So this was Nvidia's second base. So you can see where the green arrows are where I bought. So we had a pullback. It formed up. Set up a nice pivot. Bought it when it bounced off the 10-day. Bought it when it gapped up and formed up. And then I bought more on the gap on earnings. And I held my two positions into earnings, which I almost never do. I mean, I never hold into earnings, but you get a market leader setting up a second base. Again, it looks textbook. I was willing to hold into earnings for this. And then I aggressively added. I mean, it was maybe a 30% position into earnings. So to me, that's not that big, but and then I added aggressively on earnings. And then let me see if I have that
The
where
after.
I
Yeah.
exited. Yeah, I think I have the after. Yeah. Yeah. And then
That's
I,
a,
then I
that's a
exited.
nice sell. Yeah, very
Yeah. And then
nice.
I exited on those 3 days. Uh, Yeah, and then the third day it closed below the 10-day, and I was fully out. Yeah.
Do you exit like 33%, 33%, 33%, or how do you decide how much to sell on each day?
Right. So I think that was probably like 25, 25, and then the rest of it. But
50.
yeah,
Yeah.
in general, I'm going to sell half into strength, give or take, and then trail the rest. In a coming out of a first stage base like Nvidia, like there's no chance I'm selling half of the strength in the first 5 days. Like I'm going to let it run because you got a market leader coming out of a first base at the start of a new bull market. Like to me, I've studied enough charts that the move's not over after 5 days. It's going to go quite a ways longer. But in general, that's what I would say. But it depends on the market and the stock and where you are in the entire cycle.
Yeah, excellent. All right, let's keep rocking through some of the trades.
Sure.
Yeah,
AMD. Okay, we went through those. Let me Reddit. Oh, Palantir, and then IO and Q. Okay, so this was the first quantum. I actually missed all the quantum names except this one, but it's set up in it was a power play, and
hmm
they reported earnings, and it went through the highs of the power play, so I bought it. And I remember going in with decent size because it was like a more speculative name. The mega caps had run, and I thought that it was time for them to take a break and for different names to lead. So I sized. I think it was like 1.5% account risk, but yeah, I mean this was a big trade in November. I mean November was a good month. It was this one where I bought it on that breakout of the power play. I did do some minor selling in the first few days because I had gotten chopped up in October pretty badly and I wanted to lock in some profit.
Hmm.
Um, maybe we should do over the monthly results because like October, I had a large drawdown for that year. Um, sorry, let me go
In
back.
general, you kept it pretty in check though. But yeah, October was
Right.
the
Yeah. So,
steepest.
October, I remember trading October, everything was set up and looked primed and it would just keep not breaking out. And I remember thinking at the start of October, like, the election's coming up. You're probably going to need the election before things really move. And then just seeing the charts and be like, oh, yeah, I can't help myself. And I was just buying, just get knocked out like that. Like, oh, but everything looks so great. And then when the election happened, obviously, everything just like took off, right there. But I think IONQ might have been, let me see what day it actually was. Was that the day of was it right after the election? It was oh yeah, it was like right after the election. It looks like 11, 10, 9. Yeah. So, but I mean that was a big trade in November, and you can see I sold below before it hit the 10-day.
Yep.
Very hard. I mean, this thing was. I mean, so these candles don't look like much, but these are like 15% ranges every single day. Like
Right.
when you don't have any money involved, it's like I mean, come on, you just sell when it goes below the 10-day. It's really that simple. It is that simple, but it's very hard to hold when you're seeing large dollar swings in your account. Yeah. I mean,
Yeah.
if you've traded, I mean, if you traded size or traded a large percentage of your money, it's very hard to hold through those swings when you're seeing, a large, this one was like 38% account position and it's routinely swinging 10, 15%. I mean, this day here, I think it was at 20, 27, 28, and then, at 22, and then at 24, and then, I mean, it's just all over the place. So, it's hard dealing with those emotional swings. I want to get better at it. I
Yep.
think it'll be easier going forward because a lot of the pressure has come off after that last year, to make money. So I'd like to think I'll be more disciplined or when it comes to the sell rules, but that's really the hard part for me. The exits. And then Lunar was another one. This was a very speculative space stock. I remember it gapped here on an EP. I tried taking it and I was stopped out, and then it formed this. I'll say a three trend line touch. Thank you, Matthew Caruso. That I took right there, and I sold. So that day was earnings. I sold it into before earnings, and then I sold. I'd like to say I sold at the top, but no, I sold at the literal low of day because, of course, it was going to close below the 10-day, and it did not. Still a great trade, but disappointed with that exit because, of course, it snapped back the next day. Yeah,
That's trading. That
that's
that will
trading.
that
Yeah,
will happen.
yeah,
Yeah.
yeah. It's incredible how often the stop it goes right to your stop and then you just prematurely exit. And of course, that's exactly, so I actually have a friend I mentor and I was talking with him about this, about how often he'll find that where he exits is the low of the day or when he enters, it's the high of the day. And I'm like, well, are those pre-planned? He's like, no, those are emotional exits or entries. I'm like, well, that's like what you're feeling, everyone's feeling.
Yep.
Everyone's feeling it. So when, and we're all human, we feel the same things. We act the same way. And markets, like we're herd animals. When you are exiting, everyone is exiting. And that's why it's the low of the day. And when you're FOMOing in, everyone's FOMOing in. And that's why it's the high of the day. And that's why it's so important to have rules because the rules are designed to protect you from yourself and making emotional herd-based decisions.
Again, really well said.
Yeah.
And yeah, yeah. This one was it. I don't know if the space stocks are done, but this one that was a great move.
Still going. I mean, again,
Yep.
using my 50-day trailing stop, I'd still be in it.
Yep.
Didn't even get close to the 50-day. So I think it's at 24 now. So that entry was like, 8.50, $9, something like that. I'd still be in it and it could keep going. So I mean, there'd be multiple trades and that was in early November and you're still in it. So yeah, I mean, in a strong trending bull market, I mean, you're not going to outperform the 50 or 20 or 50 day.
Yeah, interesting. The last day you sold as well lines up with the market pull in low too with the 5 days. So that's just a observation.
Yeah. Oh, yeah. And of course, everything I had at that time was pulling in. So
That's how
it's
it
not,
goes. Yeah.
obviously, if let's say everything's going up and one name's getting hammered. Oh, no problem. I can hold it, right? But let's say every name you have is down and you're like on leverage, right? And this name is down, 25%. That name's down 5. That name's down 10. That name's down 7. and you have this incredible portfolio pressure, right? And that's really what causes those errors is that you're feeling the pressure of your portfolio. Mario Stama, I'm gonna
Samatudis.
I'm
Yeah.
gonna butcher that name, sorry, but Mario's had he had a great thing about looking at your portfolio ADR and to get to know what to expect, right, in terms of your portfolio. If you're in names that are moving 20% a day, um, yeah, you have to expect those kinds of swings in your portfolio. So, I
Right.
did build a spreadsheet. I call it like a heat monitor where I put in all my trades with the ADR position size so I can see what to expect. I mean, exactly what he said, to see what,
Right.
what a normal day, if your normal portfolio day, you should expect, a 15% move and you get, a 20% move like that's normal. Like if you can't handle the volatility, you need to sell to strength and reduce size or trade different stocks or, find some way to curtail it because if you're going into with these names, full size without selling it to strength, like eventually they're going to reverse. You're going to get clipped.
Right.
Yeah.
Yeah. Excellent. Yeah, and this is another example where you got stopped at once, kept it on your radar, it set up again, and then another pattern, and
Right.
ended up being a great trade for you. So that's great.
Right. I think that's all the things I had.
Hmm.
Uh, I wanted to talk about trading for a living actually, because some of the
Please.
traders I met, I think that's the dream of a lot of guys is to make millions trading for a living on a tropical island, right? Which, I mean that was my dream too. I mean, like, why wait till you're retired when you can do it right now? Um, I mean, right? I mean, it's the dream. It is incredibly difficult to trade for a living. I think Jeff Sun on Twitter wrote some incredible pieces about it. And after going through it, he's like, this guy's absolutely right because he's done it. He knows. I'm like, you just when you've done it, you can really relate. It resonates with you so strongly. But trading full time is not trading for a living. Trading full time is your wife or girlfriend works and helps pay the bills. Trading full time is like you're getting a salary, and from your job that you're a trader. Trading for a living is like your account is paying the bills, and if you don't make money, you're drawing down. And so I went in with multiple years of living expenses and a large trading account. And at least in Puerto Rico, a lot of people moved here during COVID, so the rent more than doubled in like a year, right? I came here with one kid, now I have three. Okay, paying for private school. The wife's not
Yep.
working anymore. Like everything is coming from your trading account. It's a ton of pressure. She asks you how it's going. Oh, well, I'm down for the year, Didn't we move here to make money? Yeah, we did. Well, so why aren't you making money? Because they don't understand. She doesn't trade. She has no idea. So trading for a living is very, very difficult when you have high and rising living expenses. If you're gonna try it, you got to be. I mean, I would recommend being a young single man or woman, right? When you can keep your expenses low and you can live in a studio, right? You can eat ramen, you don't have to pay for
Yep.
family. It's a very different game when there's kids involved. And I would not recommend it until you have. I was a little optimistic in terms of how it would go. Um, I would recommend years of consistency, multiple years of living expenses, assume the worst case you're gonna, whatever your worst drawdown is, double or triple it. Assume that's gonna happen 2 years in a row before you contemplate it. Just to be prepared for the worst case scenario. Because, like I said, I've met a lot of traders here, and a lot of them had to leave because they blew up. Sometimes in one trade, sometimes in three trades, but they had to go. And it's very, very, very difficult. You hear a lot of story, there's only winners on Twitter, right? There's nobody loses, everybody wins. It's the best thing ever. Like, no, like trading is really tough, and unfortunately, a lot of people, they can't do it. It's very difficult. Like, I can't stress that enough. And it's not just the act of trading; it's managing your money, managing your account, managing living expenses, plus, there's so much stuff. So yeah, I just wanted to say that Jeff Sun, he had a great whole tweet deck about that, and it was really incredible.
Yeah, I think that again that's really well said. And if you had any advice to yourself, having made this decision and lived through it, what would you kind of say now?
Geez, I mean, I would say, it all works out in the end, thankfully. But in hindsight, if I knew how tough it was going to be, I would have stayed in New York and let my wife work and traded, full time, but not for a living.
Built up the account
Her
more, yeah.
salary covers the bills, and I get the chance. There's no pressure to make money. She's not like, what's going on? You just get a trade, and if there's nothing to do for months, if you're in a bear market, you can just sit back and relax. You don't feel any pressure to trade, because a lot of those losses was me trying to take money from the market when it wasn't going to give me any. It was trying to draw blood from a stone, and that is not. You do not want to be trading in a position where you need to make money, because you're just going to make mistakes. And I made a lot of mistakes. So I would say, you can trade full time, but trading for a living is totally different.
Yeah, perfect. Christian, I did want to touch on your routines a little bit. We haven't talked too much about that.
Yeah.
Could you maybe break down your weekly or daily routine to find these type of opportunities that you've gone through? Look for EPs, VCPs,
Right.
all of that. What are you kind of doing? How are you screening? Are you going through a lot of names? Are you focusing, on just a select few and waiting for the setups? How do you kind of typically go about it?
Right. So in the past, I'd be all over the place. Nowadays, I'm just focusing on the top names. I told a bunch of guys the average RS of the names I traded last year was like 98. Okay, so I'm just going for the top names. I want names that can move. I want high ADR, and I'm just following the leaders. Really
And the
that
themes, it seems like the key
the
themes.
themes, but those
Yeah,
names are also going to have higher. I mean, they're going to have
yeah.
everything. You want to be in the leading stocks, in the leading sectors, that can move. And yeah, I'm watching them every day. I mean, I'm in front of my screen every day watching everything. So, I mean, weekend routine, yeah, I'll go through the charts, but it's like I know all of them very well. I follow them all the time. So, but yeah, I do this, 8 hours a day or more really, but every day, 7 days a week, it's like it's nonstop. I mean, I don't know how many I mean, I know some of the guys trade for a living, like Oliver Kell, Matthew Caruso, Leaf Story, a lot of them do. Some guys are part-time, but when you're doing this full time, I mean, it's like I mean, you're just obsessed with it. I mean, there's no shortcut. You have to just you put everything you have into it. So I mean, routines. Minervini actually spoke about this in his gala. What kind of psychological or mental preparation do you do before the trading day, right? And he's talking about visualization and all this stuff. And I'm thinking, geez, I don't do that. Like, should I be doing that? And then I'm thinking, like, oh wait, actually, you're doing it all the time. Like, you're just constantly thinking about stocks all the time. You're constantly visualizing. You don't need to do a routine because you're just doing it all the time. So yeah, that's that's what I would tell you. So it's not really routine. It's just nonstop. Yeah.
Yep. No, that makes sense. And it's funny, every trader I talk through does it a little bit differently, but at the end of the day, they're all going to be trading the exact same stocks, no matter if they're screening every day. It all kind of comes to the same end result
Right.
at the end of the day. Um, let's see. Um, how many at the open or at the start of a typical trading day, if you're looking to add positions, how many stocks are usually focused on and potentially ready to act on that day? Are you setting a wider list and waiting for alerts to hit, or are you focused on just a handful of few watching them very closely?
Right. So for episodic pivots, for earnings gap, I know what stocks are reporting earnings. They'll be on my watch list. If there's any names that come out of nowhere and just report, have a big gap, I'll watch those too. Usually, I'll have a watch list and a focus list ready.
Yeah.
Um, so yeah, I mean, I definitely trade. I try to trade fewer names at once. In the past, on the start of a rally, I would just put on six positions at once at 1% risk each, right?
Yep.
And then you can imagine how that can go if that rally fizzles. I mean, not well, real fast. So I definitely, again, progressive exposure, starting much smaller, 0.5% risk. Um, sometimes less, but really want to see traction before getting really aggressive. Sorry, that I kind of went on a tangent again, but the original question,
Yeah. So at the open, how many are you typically
right?
focused on and ready to enter that day?
I
Yeah.
mean, probably 3 to 5 at most, I would guess. But
Yeah.
I'm not going to enter five at one. I'll put on one. Again, my size is so small now, so I could enter five now, and it wouldn't, it wouldn't be a bad drawdown because I'm always thinking, now I'm just so focused on keeping the drawdowns low.
Yep.
So, I in the past, I was just focused on how much can I make versus how much I can lose, and that was really that I mean it took me years to get to that point. Some people learn faster. I guess I learned slow, but it took me a long time to get to that point. Just really focused on how much can I lose. And when you think of it that way, I think that's key. So yeah, I mean I could put on five positions, but it would be, microscopic size. Yeah.
Yeah, it seems from chatting with you about that, it seems like that's really what has kind of led to turning the corner and everything is the progressive exposure aspect
Right.
and knowing
Right.
when to be aggressive, all of that. And
Right.
yeah,
So if you look at my results, you can see I don't have an issue making gains in good environments. That's not the
right,
issue.
right.
That's never been the issue. The issue has been in bad environments, you give it all back.
Yeah,
So the game changer for, as a boom and buster, it's you cannot draw down. That is like just, that's all I think. I mean, that like it keeps me up at night. I mean, you meet a guy who turns, an 8-figure account into zero in one trade. You pay attention. You really have to protect yourself in this game because if you lose all your money, game over. You can't play anymore. So yeah, I mean, it's really about progressive exposure.
excellent. Christian, this has been really fantastic. I've really enjoyed this. I think there's been so many valuable bits and pieces that I think viewers can take away from this. If you have, one takeaway or one final thought that you really want to pass on to traders watching this, maybe they're just starting out or are trying to figure it out. What would kind of that last bit of wisdom or final thought be?
Right.
What do you really want to get across to everybody watching?
Yeah, if you want to do this and really outperform, you have to go all in. You have to really devote yourself to it. It's really hard, but if you can do that, you have a shot. And if you make it, it's worth it. It really is. Um, it's going to be a lot more frustrating than you can possibly imagine, and a lot more emotionally uh, and mentally challenging. I'm on Twitter all the time, so it's I mean, I don't follow a lot of the accounts that just post, huge game. I follow people that I can tell like these guys trade because, they're very humble, they're focused on the downside, and it's just, they're just trying to help other people, because I
Right.
I find that I've just been helped by so much by these people on Twitter, and I've never met a lot of them, but I love going to the gala this year and meeting so many traders and really trying to help other people because, I know how hard it is. I've traded for 7 years. I know how hard this game is. I know how tough it is. When it's not going well, you're just like, this is absurd. Like what am I doing with my life, right? But no, it can be done, but it's very hard, and you have to devote everything to it. And
Yeah.
if you decide it's not for you, that's okay. That's okay. You can buy the S&P or the Nasdaq, and you can outperform 99.99% of all investors and traders with the click of a button, and then you can walk away and enjoy your life, and that's great. Um, and I was talking with someone the other day, I think maybe it was my wife, and she's like, "Don't you think that's a little discouraging?" And I was like, if you find that discouraging, then you shouldn't be trading, right? I mean, like, we all trade to beat the index. You want to be able to beat those indexes over the long term. Otherwise, like, what's the point, right? If you're discouraged, then maybe it's not for you, and that's okay. That's great. You can have an incredible life and not have to worry about it. But if you really want it, you're going to have to fight for it. Because a lot of people want it, and you gotta outwork other people and reach out. I'm on Twitter all the time. I love helping people. If you have questions, message me and I can share. I have so many stories of traders that I met here. There's a lot of incredible traders, guys that are just, knocking the cover off the ball that do not trade this style. They trade totally differently.
Yeah.
Um, and yeah, I got a lot of stories, but yeah, that's what I would tell traders. That's what I would share with them.
Excellent. I think showing them what you've done to work on your trading, I think was really key today.
Yeah,
The model books you kept.
right.
And one last question for you. Actually, I noticed you had notes on each of top traders. You also had Warren Buffett on there.
Right.
What are you doing there to study the greats in their respective fields to
I
try
mean,
to learn from them?
right. It's just whatever you can get. I mean, these guys have done it. So, it's like the Minervini thing, like when you meet someone who's done it, like you shut the F up and you listen to them because, they've done it. You want what they got, you got to listen to them. So these guys have done it. So anything they give you, like you take it. You get a notepad out and you write it down because they've done what you can do, and if they can do it, you can do it. That's what I would say.
Yep, perfect. Well, Christian, thank you again for your time. I really, really enjoyed this. We'll list your Twitter down below. Is there any other resource that you'd like to recommend people, or we can list down below as well? You mentioned a bunch of books too, but
Twitter's fine. Oh, books? You want me to list
no,
the books?
no, just anywhere where people can reach out to you and get
Oh,
more.
Twitter's the best one.
Towards
Twitter's the best place for sure. Yeah, Twitter's the best
cool.
place. Yeah.
Awesome. Yeah, we'll link that down below. To everybody watching, I hope you guys really enjoyed this. If you're sticking with us thus far, I think you definitely have gotten a lot of really good, important takeaways. Check out Christian's Twitter down below. Leave a like down below on the video if you enjoyed. And thanks for being here, and we'll see you guys in future videos. Take care.